What's up, everybody? Paul Childers here with Blue Sky Biz Solutions. So because we didn't have a webinar this week, I wanted to have one, but due to some changes that I'm doing with my CRM and stuff, we didn't have one. What I'm going to just kind of talk about and go over here is what it is that banks look at when they're looking at your business credit score and why being set up properly and structured properly matters. Because if you're not, you're going to have a lot of issues getting approvals with lenders. And that's just the whole of it, right? Like we've got to make sure that we're matching up with the right lender and doing the things that they want to see um, in order for us to be lendable with them. And some of that is just structure of our company. So I'm just going to kind of walk everybody through kind of this slide, which is the 10 rules for building business credit. It's a really simple slide. It just kind of gives us a presentation on like what it is that is important when we're doing stuff like this and building our business credit. So with that being said, rule number one is you got to have an LLC or a corporation with an EIN number. That is first and foremost the most important part of this. If you're a sole proprietor and you don't have an LLC yet, banks are going to look at you like you're just some sort of trial company that isn't really serious about being in business and honestly doesn't take themselves seriously. And by not doing this, also, you're hurting your time in business status. So if you're going to do a side hustle that potentially could turn into something more, just pay the extra fees and set it up as an LLC right away so that you can start your time in business like meter right away and not have to wait to get it all caught up when you do decide to jump in and make it formally your business. Again, like I said before, you got to have your EIN number. So that EIN number is what is the unique identifier of that corporation or that LLC. That EIN is like your business's social security number. So it is important to get that set up, and it is important to make sure that the information that is put into the Secretary of State and the IRS is accurate and matches across the board. Make sure you get a business bank account. This one can be tricky. So I always say it's not a bad idea to, have a partnership with your local lenders. That's not a bad thing. Understand their limits though, and what they probably can and can't do for you, especially as you grow and scale. And then don't underestimate the value of the relationship that you'll build with a larger lender. So, like Chase or US Bank, Huntington, Wells Fargo really isn't my favorite, but just to name a few, Capital One, because they've got some good checking accounts, they got some good business account programs, and if you have a relationship with them on that level, your chances of getting approved for like business credit cards and stuff goes way up with them. It doesn't mean that's who you're going to use for everything, but just something to think about. Now we get into like what makes a business, a business. And it's the professionalism of that business. So what are some different ways that we can make ourselves look legitimate and be professional? One of the most common mistakes that I see is a lot of business owners are just using their personal cell phone as their business number, and that's not a good thing necessarily. Like part of this is you want to protect yourself. The other part is that number needs to be registered with 411 to be a legit number. Banks will check this too when they are doing backgrounds and underwriting on you. Google My Business Profile. This one may not seem like a big deal, but it is. Number one, you want to have physical presence on Google. So in order to have that, you need to set up a Google My Business Profile. These typically can cost like $21 when you do the full service, which gives you the domain address and stuff for like your email and all that kind of stuff too. So, and I think actually Google might have changed that now. So either way, getting a domain name so that you can do your email address under all that stuff is really simple. And it's not that expensive, whether that's through Google or somebody else. But a Google My Business Profile is still necessary for you to have a Google presence online. Email addresses. I see this a lot. So when I see a business that reaches out to me, especially somebody in like professional services, and it's blah, 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 blah at gmail.com, I instantly question their credibility and their legitimacy when I see it, especially if it's somebody doing, like anything with financial planning or finance is or anything like that, right? Because it's a red flag to me that they didn't even take the time to make themselves look legit before they started advertising everything out to people. So take the extra step, whatever your business name is, get the domain name, put info, sales. You can even put your own name there, like I did with mine, like call it blueskybizsolutions.com. You look a lot more professional that way, and it's going to allow you to get past a lot of these auto checks from banks and stuff too. Your business address matters. So if you just started a business from home, great, that's awesome. Um, Make sure you understand that a lot of lenders don't like home addresses for banks, though. Or for businesses. So you can navigate that by having a registered agent or a virtual office. You'll have to pay either yearly or monthly for those services, but then it will show up as a legitimate commercial office with a legitimate mailing address, and it will still get forwarded to whatever mailbox you want it to. But that's important as well, and that needs to match everything. Uh, Building the actual business credit, connect and register with Business Experian and Business Equifax, as well as Duns and Bradstreet. So your Duns and Bradstreet number is super important. That is your API key to get into the business credit world. Without that number and without Duns and Bradstreet, you don't have any connection to the business credit world. So no matter what you do, you'll never report business credit, which you want. The other piece of this is you're going to need to get your BIN number from Business Experian and match that up because that is also an access to get reporting to them. Equifax is nice, it's simple, where it will just start reporting for you. To monitor your credit, a really simple monitoring system is nav.com to be able to monitor and see how things are tracking. And then number 10 is apply for trade lines. Any kind of loan, credit card, vendor line, store credit, stuff like that. Those all count as trade lines as long as they're reporting to the bureau and as long as you're set up right. So why does this matter to you as a business owner? Well, this matters because lenders want to see that you are running a professional business. They want to see that you have your stuff together, have a plan in place, right? So like part of getting a loan is having a plan in place. A lot of the times when we go into banks, we go, I need money. Well, for what? Well, I don't know. I need it for some equipment. I need it for property. I need it for whatever it is. Whereas if you actually go in with a purpose and an intent, here's our financial statements, here's our documents, here's our business plan, here's our ROI that we're expecting off of this, here's how we're going to pay for these things. Here's how this is going to benefit us as a business. Lenders are going to look at you a lot more favorably because you have your stuff together and you're kind of setting yourself apart from everybody else. Now, the other piece that I see a lot of business owners make mistakes is they go to a local lender or a credit union, which isn't always bad, but understand that they have severe limitations on the amount of cash that they have liquid at any point in time. So if you are a business that's doing over 7 figures, I would not recommend being partnered up and paired with a local lender or credit union. You need to get access to tier 1 banks and bigger banks, non-traditional as well, that have far more cash liquidity in them than what the local lenders do. Because what you're going to do is you're going to end up needing to transfer some money. And because you're so big, they're going to have to wait 45 to 60 days and to get all that money pulled together. And it's going to frustrate you because you needed that money in 30 days or 15 days to get a deal completed. So be mindful of that. And then also be mindful that every lender is different with what they like. So not every lender likes to lend to excavation or construction companies. Not every lender likes to lend to accountants and law firms. So be prepared to ask those questions because they don't advertise that stuff, right? They just say, hey, come apply for a loan and we'll give you the money. And they are all notorious for basically telling you whatever you want to hear. And that happens a lot if you don't have very specific questions and understand what it is that you're actually trying to do with your loan. That will get you into a spot where you're probably going to end up having a bad experience with that lender. So knowing who to go to, knowing what they do, that can be equally as critical to getting your approval as having all of your ducks in a row, making sure your bank statements look good, that you don't have any non-sufficient funds, that you don't have any negative account balances over the previous 6 months, preferably the entire year, that you have good cash flow and deposits, that your bank account has a minimum of, I would say shoot for 10% of your gross annual revenue, as your false bottom in your bank account. And thanks Jonathan Fedora for pointing that piece out of it, because it just proves stability to your bank and your lenders that you have, no worries about not having the cash on hand to cover stuff, right? But if that's not possible at this point, at least aim to have a minimum of somewhere between 10 and 20K buried in there to start with, and go from there. So obviously time in business matters. Personal credit matters, as a reference check for a lot of lenders that do business lending. And depending on the type of lending you're trying to do, and the lender you're trying to work with, to get off of personal credit completely, that can take some time, and it takes cash flow, and then it takes a good business credit score. So if you're just starting out and you're under like 2 years old and you're not even pushing 7 figures yet, chances of you getting off of like your personal credit being used, as a personal guarantee is pretty low. And that's okay as long as the lender you're working with doesn't report to the personal bureaus as well, because we're trying to protect your utilization and we're trying to protect your personal credit score. So if you're going to a local lender or credit union or any other lender that says you have a business loan, but they use your personal information, and then you find out that it's reporting to your personal as well as your business, then that's not a good situation that you want to be in. We want to find the lenders that if they're going to use our personal score and information, they're going to at least only report to the business bureaus, unless for some reason we go into default or missed payments and stuff. And then we obviously, have the accountability of having that report back to our personal. As you get bigger and have been in business a little longer, so if you're a 2-year-old plus business and you're doing mid 7 figures and cash flow is good, net income's good, your P&L looks healthy, your balance sheet looks healthy, you're carrying a high ending balance, and you have a business credit score that is developed and robust, that has comparable debt history on it, and a good lending history on it, then we can start getting you off of personal credit checks on equipment and vehicles and credit cards and operational stuff. But that takes time, and it's a process, right? Because you got to be paying and have actively working on, 10 to anywhere from like, it's probably more than that. It's probably like 12 to 17 trade lines that you have going on in your business that you're actively paying on and managing, in order for your business credit score to develop high enough to get access to the type of lenders that you're going to want to work with that won't use your personal credit for reference. So something to be mindful of. Everybody's kind of always asked me like, well, how does business credit actually help me with my loans? And the end of the day, what business credit does is it speeds everything up for you. Once you get an application in with business credit and you're doing like commercial lines and corporate lines and stuff like that, your lending process now all of a sudden is significantly faster than what it was prior to that. And you can do that with a lot of original equipment manufacturers like John Deere, Case, Kubota, GM, Ford, Toyota, all that stuff. But they all have different requirements, and they all have different things that they want met. So you got to know that as well. But the benefit there is it's speed and efficiency, right? You fill out an app, you get the approval, you know exactly what everything looks like. And from that point forward, it's just, you need a vehicle, you just call, you need equipment, you just call. There's not the hours of paperwork. There's not all the inquiries on your personal credit that are there. Interest rates, I always say you sacrifice something to gain another thing. So interest rates can be a little bit higher. I haven't seen them significantly higher overall, right? But that depends on your business. It depends on you as a business owner and how everything is running. But I truly believe that giving up a couple points of interest to have 100% security on your personal assets, to know that stuff isn't going to come back to you, and risk everything if something does happen. Like, let's say you got a driver that's out with a truck and he gets in an accident and kills somebody, and that defense attorney for that person that he killed does a little bit of investigating and sees that there's a personal guarantee on that truck. Well, now you've just given that defense attorney access and the green light to come after everything, and they will, because that's what they get paid on, right? But they also tend to take the path of least resistance. So if you've got a truck out there that isn't in your personal name and personally guaranteed, it's just in the company, they're going to stop at that level and they're not going to pursue further. So a lot of this is all about risk mitigation and understanding, like, when things go wrong, they can go wrong fast and you can lose everything in a blink of an eye. So to me, as a business owner, when I'm scaling, like that peace of mind of knowing that my business can't just go up like that is worth, maybe 3 to 6 extra interest points on pieces of equipment and vehicles that I'm taking loans out on. Because I can tell you what, like paying, a couple of grand more on a loan, uh, is a heck of a lot better than losing a, 4.5 or $5.5 million producing company because you were hung up on interest rates, right? So that's the whole point of business credit is to come in and take over on operational stuff, daily expenses. That's where it really thrives. So getting you off of credit cards where employees could be using your credit card at work. And each you maybe have multiple companies and that employee is responsible for paying stuff off. And all of a sudden something gets missed. And next thing you know, you've got a message coming up on your email and phone that says, "Oh, your personal credit just dropped 150 points." Oh, why? Oh, you got a 60-day late payment or a 120-day late payment or a 45-day late payment on this credit card. And now you're considered derogatory. So that slaps back onto your personal and it can come back hard. And it's not easy to get those off because it is a legitimate late payment. So that's something to be mindful of as well, is like, what are you set up as? What risk are you exposed to from a lending and credit standpoint? And how do these all tie together? Traditional lenders are great for a lot of things. Um, especially bigger tier one lenders. But non-traditional lenders are also a good way to go because they usually are faster. They're quicker to fund you. They don't need as many documents. Um, and they really rely heavily on your business's like metrics, like cash flow, bank statements, tax returns, and if you have a business credit score versus looking at your personal credit, where a lot of personal like tier one lenders, especially if they're local or smaller regional, are probably always going to have to look at your personal information and want a lot of documentation before they give you a loan. And even when they do that, if it makes it past those stages, you could get it up to a board of directors and you're still leaving it up to a board of director to decide if he wants to approve it or not. And that's not a game you want to be playing because that is just, again, exposing you to risks that you don't need to be exposed to. It's not to say that you can't use them. Just be aware of what the pitfalls and the downfalls are of those lenders. So I was going to keep this short because like I said, I didn't have the webinar this week, but I still wanted to get something out there for everybody. And I just kind of wanted to keep this short and sweet and just kind of inform and educate people because, I know there's a lot of value that's out there. There's a lot of information that's out there. Hopefully people find this helpful. Hopefully it's something that you can take and you can apply to your day-to-day life and find some benefit out of it. So thank you guys for watching. If you have any questions, feel free to reach out. If you want to learn more about business credit and how to build it, or if you have any lending needs and you have questions about that, also feel free to reach out. My business credit membership program is still discounted 10% through the rest of the month here. So that's $200 off the initial price. And the nice part about that is you're paying for something that you're going to get good results with as long as you put the work in. But it's easier to put the work in when you have somebody to guide you. So thank you, everybody. And I look forward to hearing from you.